Hey everyone, welcome back to another episode of the Inside Crypto Podcast. My name is Green, your host as always. Lots of stories to talk about today. Bitcoin at $39,000 as of the day I'm recording this episode. We found out about the SEC and why their Twitter account or X account was hacked. It was SIM swapping. Bitcoin has a use case, and this has been talked about before. It's AI, of course. I figured out why there's a lot of Bitcoin selling pressure. Apparently, FTX has been unloading Grayscale's Bitcoin ETF shares. We're also talking about potential use cases for Bitcoin again in terms of the publishing industry. These stories and more, so stay tuned. Don't hit that pause button, and let's get into the first story. All right. Story number one has got to be Bitcoin sitting at $39,934. Again, since the high of $49,000, almost $50,000 when the Bitcoin spot ETFs were launched. It has come down a fair bit. And again, this is due to, apparently, as we just heard in the previous segment, people offloading shares. There's another story I have today, which is about lots of people profit taking. People who bought Bitcoin at the low of $16,000 last year sometime, or whenever that low was, right? Of course, these people going back up to 48,000, people would have 3x'd their investment, of course, which is a great deal. Why shouldn't you profit take? And again, if you go back to last week's episode, we talked about Bitcoin potentially going down to $38,000 was an analyst at 10x Research suggested. Some people suggest even more pullbacks as people profit take, as there's a bunch of court cases going on with FTX, with Binance, with other people, with 3 Hours Capital, of course. And people are selling their Bitcoin, I think Mt. Gox as well, where they have to pay back people that they owe. And so that's putting a lot of pressure on the market, hence the price going down. And so we'll have to see what happens. And let's move on to today's first story. First story of today is from CNBC by Arjun Karpal. Again, another story we've taken from him. The tech behind blockchain has found its killer use case in keeping AI in check. So AI continues to be the dominant word in 2024, just as it was in 2023 and in 2022, right? With ChatGPT, with Bard, with Anthropic's Claude, with KeyGen as well, which is another sort of interesting AI technology. One of the problems with it, right, is verifying, like, where did the data come from? Where did the training data come from? And that's a problem because a lot of these people don't want to release their training data. And there are open source solutions like Stable Diffusion, which is an open source AI solution. There's a bunch of other solutions as well, where the training data is open source, so you can see where it comes from. But like Meta's Llama, of course, that is not open source, so we don't know where it comes from. So the article suggests like blockchain could be used to check on the data that artificial intelligence models are being trained on to avoid issues like bias, executives told CNBC at the World Economic Forum in Davos. So again, bias is an issue. Artificial intelligence or AI assistance, one of the biggest issues is saying crazy things. Or when ChatGPT 4 or 3.5 was around and people were using it, it's like after 17 or 18 back and forth conversations, it would start to say crazy things and do terrible things. Facebook or Meta's first AI was very famous for saying racist things and anti-Semitic things. One of the concerns around AI models, the kind that underpin applications like ChatGPT, is the data they're trained on contains biases or misinformation. Again, the common misconception is that AI thinks, but right, what it is a really sophisticated mathematical model that allows you to say, okay, if person asks this, then I need to put this in, and this is the logical or the mathematical proof for that answer. Again, it's just pulling information from its database or from the internet, and it's basing it on and doing some sort of checks and proofs there. So blockchain could be that transparency layer, as we know, because everything on the blockchain is fairly transparent for the most part. And then it says right there, AI training data can be put on the blockchain. That would allow the developers of AI systems to keep track of the data and the model that has been trained on to mitigate those dangers. Even in the sense of pulling data from the internet, because places like Bard, right? Bard can, and ChatGPT 4 can now access the internet and give you responses based on that. So in a blockchain world, I can imagine you do a search query and it says it pulls from the internet. And then on the blockchain, we can see where that information came from. And if it was an issue, if there was bias, or if it was misinformation, you could put a note on the blockchain or a blockchain explorer and say, hey, this data is false, or this data is misinformation, or this data is biased. And then that could inform training of that AI going forward, which is pretty cool. All right, our next story is going to be about the Instant Sentiment series. If you read a Bitcoin magazine, they're doing a series written by 𝕊𝕦𝕡𝕡𝕠𝕕𝕡, right? He's doing a series about how Bitcoin and the Lightning Network and various other solutions could help change the way we think about money and how we can change certain industries and the way they work, right? So this particular article is about the publishing industry. So if you're familiar with the publishing industry, you would know that it's not very efficient. It's really hard to make it as an author. One of the things that it's brought about Amazon's publish on your own sort of thing is because to get published by an established publisher, Penguin or like Random House or like any of the academic series, it's pretty difficult. And what this usually happens is you get a check, right? $50,000, $100,000, $200,000, and say, hey, please write this book, please finish this book. You have an editor at the company and you work on it, you send it to the editor chapter by chapter, and eventually your book is done. And then you get a percentage of the royalties. So again, that sort of big block amount of money is the first check that you get, the signing check or the bonus check that you might get in other industries. So Ivan in this article basically makes the argument that like a lot of this is super inefficient. With Bitcoin, with blockchain, we could transparently see, again, going back to the idea of transparency, that this person did this work, the guy who read your audiobook, the person who designed the cover for your book, you who wrote out all the chapters, and we could see who did the amount of work, what the payment should be. And again, this also deals with some of the FX issues, which they argue in the article is that when you're selling a book worldwide, you're selling some copies of your book in South Africa where it's rands, and then there's some exchange issues there, which as a small company like a publishing house, relatively small, they're not doing the best to minimize the impact of currency exchange rates. When it is on a layer like the Lightning Network or Bitcoin or maybe potential other networks as well, that could reduce that risk and maybe improve money flows to the author and maybe make it easier to get into publishing. I think that's a great idea. I've always wanted to be a writer. I've just pushed that away as I'm doing other things, especially like making YouTube videos and Instagram videos and just videos in general. But I can definitely see crypto not just changing the publishing industry, but also changing other industries that are dealing with sort of these currency fluctuations and things like that. Story. So it says FTX sold about $1 billion of Grayscale's Bitcoin ETF, explaining much of the outflow sources. Bitcoin's price has fallen since Bitcoin ETFs were approved. In theory, now that FTX is done selling its substantial holdings, the selling pressure could ease since a bankruptcy estate liquidating holdings is a relatively unique event. Now, this is entirely possible. There are a bunch of stories I've heard across social media, Twitter and Facebook and LinkedIn. This is the first time I've heard of this story, but it makes total sense. I'm going back to my intro of today's podcast, is that there are people who are trying to get rid of their Bitcoin for legal reasons, people who were in GBTC, and because GBTC is pretty expensive, they're selling out of GBTC, not they can do so, and moving into other products. This makes a lot of sense. I haven't seen the narratives, but it also makes me think of the narrative that people are being careful with everything that's going on macroeconomically and globally and politically, with the things in the Red Sea, with inflation coming back. People might be like, okay, I'm moving out of volatile assets or quote unquote volatile assets like Bitcoin and moving to safer things like treasury bonds, whatever else people want to move into. So that's that. We'll have to see how this sort of plays out. Again, there's still like a much larger picture where people are thinking, okay, it's going to take a while for people to get into Bitcoin for this to be out there again. Lots of companies will be like, okay, we're going to go out there, we're going to talk about Bitcoin, we're going to meet the regular Joe and Janes in the world and say, this is why you should add Bitcoin to your portfolio. This is why it's important. There's also the potential talks of further ETFs, Ethereum, Solana, Cardano. So we have to keep that into account when we think about the future and what Bitcoin is going to do. But this definitely is a nice step in the right direction in terms of informing yourself, like why has Bitcoin dropped to $39,000? Where is it going now in the future? Again, not financial or legal advice, but definitely something to keep in your mind as you're thinking about crypto assets and moving forward. All right, let's move on to the next story. So the next story is basically, everyone heard about this story. Most people did, even if you're not into crypto, was that there was the SEC posted probably like 24 hours before that saying, oh yeah, Bitcoin is approved, because their Twitter account or X account was hacked, and it was basically done by a SIM swapping. This is an interesting sort of hack that you should be careful of, especially if you're in a country where eSIMs are a thing. eSIMs are not a thing in Taiwan, as far as I know. When I went to India last year, my older brother from England, he just did an eSIM online. And so he had an Indian SIM card when he was ready and he landed in India. I bought one thinking I could, but no, it's not done here in Taiwan, which is safe because that's how things get hacked. Is basically an eSIM allows you to intercept 2 FA codes from somebody's account. So if you have a phone number and you get an SMS message as a verification, if somebody jacks your phone number, of course, you're no longer getting those messages and they can take over your account. So that is something you have to be careful of. That's why multi-factor authentication is always suggested for any sort of company account or any your own personal accounts. I have a security key, I get an SMS as well. And on the bank's side and on some sort of platform side, they should be able to have like, okay, Korean is logging in from Ghana in Africa. Of course, he's not there at the moment, so we should block this access, right? Password managers or secure managers like 1Password, like Bitwarden, and also a great idea. Again, SIM swapping is very popular in some countries. Be careful of that. Make sure you have multi-factor authentication available. Make sure you use a password manager. Make sure you have a long password, nothing that's just letters or just numbers. I've talked about brute force attacking before. I'm not going to talk about it again. But yeah, that explains it. Hopefully the SEC has fixed this issue. And let's move on to today's last story for today. So today's last story again ties into the idea of Bitcoin's price going down. This is a story from Crypto Slate and is written by James Van Straten. It talks about 91 days of Bitcoin historical profit taking. So if you're new into crypto, or even if you're old, one of the things people always tell you is you should profit take. You should not hold and hold, even though HODL is another thing in cryptocurrency or digital assets. But this story basically talks about how in Bitcoin or in crypto, it's historic. There's never been so many days of people selling cryptocurrency in order to take some profits, in order to cash out. And that's really interesting. And again, it goes back into the idea. Lots of people bought a Bitcoin when it was really down $16,000, $21,000, $30,000. And when it went back above 40, close to 50,000, people logically, of course, sold some of their holdings and took their money, or sold all of their holdings. This is something to keep into account. And that is it for today. I hope you enjoyed today's episode. It was, as always, really fun. I do think that I'm going to do 2 interviews going forward. Maybe 1 interview a month. Maybe we'll do something like that, right? 1 interview a month. But probably 2 for February because I will be in South Africa. And my coworker, Lorena, who's going to be doing a lot of this stuff, I don't think she's ready to do a podcast just yet. I might ask her about it, but we'll see. And yeah, so keep an eye out for that. Keep an eye out for the YouTube shorts. Check out our Instagram and Facebook channel. And then we will see you guys same time next week as usual.